This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi, everyone. Before we get on with our podcast this week, I wanted to take a moment to tell you about a recent development. We have recently completed development of a mobile app. We call it our Mobile Investing Companion app. Its name is called the Best Stocks to Buy Plus. We put quite a bit of thought into this app. I wanted it to be something that would truly bring you value. This is not a mobile app that just presents you pictures of stock charts with a long list of numbers. This app will in one place present to you timely information to make you a better investor. The app uploads our latest podcast episode for easy listening, has investing lessons, market news, expert interviews, videos, additional stock ideas, along with the ability for you to easily text me any questions you may have. The app is free with plenty of features and also has a premium option that unlocks even more value. Think about this. You can have access to free, valuable information in your hip pocket. Yet, you have a burning question? With our monthly premium subscription, you can reach out to me directly and receive attractive stock tips driven by an algorithm based on the conditions of now. This is a one-of-a-kind investing app that we developed ourselves, not available anywhere else. We're excited because we've received feedback that it's a great app. It would mean a lot to me if you checked it out for yourself. Download it today, share it with others. Just go to our website for the download link on your mobile device at www.connermg.com. That's CONNERMG.com. We're only offering the Android version for now. We expect to release the iOS version soon. Hi everyone, this is Mathis Conner with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Tuesday, March 20th, 2018. And this week, we're going to look at the best growth stock to buy right now. On our opening slide, it's called the setup and the approach. The key objective of our podcast is to present to you a high probability upside potential stock. The key tool we use is a financial model that uses multiple valuation approaches across over 6,000 stocks every week. So the view you are getting is not driven by some sensational headline in some popular publication focused on increasing readership, but based simply on the best investment opportunity we can find for you. An easy way of thinking about approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, I truly view creating such a model as daunting, but I believed I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of transaction experience as a finance and development guide to judge the research we reviewed. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. Point worth remembering, these are views based on today. An unforeseen economic report, a regional conflict, or a revised policy can change these expectations tomorrow. Benefit of using a professional money manager like Conner Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as someone to readily share their opinion with for over a particular event or concern. So, what did our model find for you this week? It turns out that the best growth stock to buy right now is in the specialty retail industry. On to the slide that says industry overview. The specialty retail industry is comprised of North American companies and a wide range of consumer retail companies. And here are the 10 largest competitors by market cap, just to kind of give you a feel for the type of companies we're talking about. TJX companies, that's TJ Maxx, Ross Stores, The Gap, L Brands, Nordstrom, Hanes Brands, The Foot Locker, Urban Outfitters, American Eagle Outfitters, and Children's Place. Those are the 10 largest competitors by market cap. The growth drivers in this industry right now are a historically high consumer price index, continued growth in online sales, and the recent reduction in corporate tax rates. The industry challenges continue to be e-commerce sales versus brick and mortar sales. And now for the reveal. The best growth stock to buy right now that we find is a company called Zumiez. And the ticker symbol for Zumiez is ZUMZ. And we see their 6-month upside potential at plus 17%. On to the quick facts slide. Zumiez is a mall-based specialty realtor of action sports-related apparel, footwear, equipment, and accessories. I mean, just think surfing, skateboarding, snowboarding, motocross, and BMX. Just a specialty retailer for people with those interests. They operate 660 stores under the Zumiez name in the U.S. and Canada, and the stores cater to men and women the ages of 12 to 24. The website is www.zumiez.com, and that's spelled ZUMIEZ.com. The company is headquartered in Linwood, Washington. They were founded in 1978, and they have 7,300 employees. On to the metric slide. Over the last 12 months, the company's revenue was $927 million. The net income was $27 million, and the cash from operations was $66 million. So they're a sizable company, but not too large. The operating margins for 2017 were 8%. For 2018, they expected to be 8.2%. On to the valuation metrics. The trailing PE ratio now stands at 22, and the forward PE ratio is expected to be 16. So when you have that relationship with the forward being smaller than the trailing PE ratio, that implies earnings are expected to increase. The PEG ratios is at 0.7. The price to sales ratio is at 0.6. The price to book is at 1.7. And the enterprise value to EBITDA ratio stands at 5.7. The company does not pay a dividend, therefore the dividend yield is 0. On to the price chart. Over the last 12 months, Zumiez has advanced fairly steadily over the last 12 months. The company last spring was around $12, and now the company's stock price is approaching $24. So it's had a sizable run-up over the last year, and we still think it has room to grow. Looking back and looking forward. Okay, looking back, the same-store sales continue to increase over the past 12 months. The gross margin was down slightly, a half a percentage point versus a year ago. The macroeconomic backdrop has been favorable for the company. I mean, there have been strong equity markets, high levels of consumer confidence, and strength in housing and job markets. And additionally, the company's had solid demand for its footwear categories for both men and women. Looking forward, tax cut benefits are expected, and continued sales and income growth are expected over the next 12 months due to its unique product mix. The why now, the bull rationale. We expect Zumiez to continue to increase due to an expectation of increasing sales per share, and additionally due to its valuation metrics. Right now, the company has a low valuation, and in the near future, we expect it to be lower, which will put pressure on the stock to increase even more. On to our summary slide. The financial statement quality of Zumiez is good. The operating margin trend is flat. Price pattern trend has been positive, as we noted. The stock has increased considerably over the past year. For the industry outlook is also positive due to this positive economy. Similarly, overall market outlook is positive. The recent closing price for Zumiez was $23, and a 6-month price target is $27, giving this company a 6-month upside potential of 17%. So it's for all these reasons that we believe that Zumiez is the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Thank you. Hello everyone. This broadcast was made by Connor Management Group. We are a registered investment advisor and money manager for individuals, businesses, and family offices. We are not your typical financial advisor in that we invest our clients' funds directly into individual stock positions. We do not put our clients into other stock mutual funds. At Connor Management Group, we help you grow and protect your assets. We craft high growth investment portfolios for your children and other minors. We manage the rolled over assets from 401k accounts. We manage IRA and trust accounts. So how do we go about serving our clients? One big differentiator is that we developed some pretty comprehensive computer software that reviews, analyzes, and ranks over 6,000 stocks on a weekly basis. And from that, we create concentrated investment portfolios of well-researched and closely watched stocks. Furthermore, we operate under a managed account arrangement. And that means you open and fund a brokerage account in your name, and we simply manage your investments electronically. That gives you, our client, the greatest control and transparency possible. You can learn more about our service at www.connormg.com. Additionally, we've set up a group on the LinkedIn platform. The name of our group is simply called Stock Investing Tips, Better Returns, Bigger Pockets. Now, this is a private group, which means you have to click the Ask to Join link. We do this because we want to be able to control the quality of the member experience. So if you like what you heard and you'd like to receive more timely investment information and be able to post questions, just send me a message to ask to join our LinkedIn group. You can readily find my profile on LinkedIn. It's Mathis Connor. That's MATHISCONNER. And if you have any problems connecting, just send me an email at mathis@connormg.com. Well, that's all for now, and I'll talk to you in our next broadcast, or hopefully with you in our LinkedIn group. All right, everyone, have a great week.